All right, cool. So basically, moving forward, I know that we were anticipating, right, a continuation back into, right, where our previous liquidity was, right, and this is very important because if we break this, then we are technically our final swing structural range is now taken out if we take it out, right? So, however, we cannot make that judgment, right? Because we trade based on reactions and transitions. So that was only something we were anticipating, but price said differently, right? When we were anticipating the run-up continuation, we were here, meaning that our internal was bullish and our internal from that was bullish as well. So we had every reason to think that we were going to reach, right, our next green line, right? Unfortunately, right, where that changes comes in the form of a liquidity grab, right? And there's a reason why we target liquidity points, right? Because we don't necessarily know how we will react afterwards. We know when a target will be met, but we don't know when exactly or what exactly will happen afterwards, because you can have a continuation, you can have a reversal, you can have anything like that. So, right, looking at this, right, where the narrative changes, actually let me make this line dark green. Where the bias changes here, right, is only until our internal structure is invalidated. So we know that we are bullish, right, in terms of our minor intraday. In terms of our scalp, we are also bullish, right? But I have to reference where exactly our final scalp structural range realistically is, right? So I'm referencing, right, a liquidity point. I'm also referencing the continuation, right? And this is a solidified low because internally, excuse the mess, but we do take internal structure, making this low solidified based on the continuation low, high, retracement, continuation. So that leads to a solidified low, unwillingness, right? And this is now where we have the conversion. The conversion meaning that we are now technically bearish, at least in the short term, because we did not make a substantial new high and we had an internal liquidity grab, right? So I cannot make a judgment, I cannot solidify the range until a preliminary level of structure is broken. So we have low, high, high, low, high, low, high, low, high, low, high, low, unwillingness, break of structure. So this solidifies my range from low to high, right? And I'm only referencing the reversal here because of the previous liquidity point being taken and we have a liquidity grab. That's the only reason why I'm referencing this, right? And as you can see, a realistic entry from a perspective of DXY is the inefficiency fill with the invalidation being at the wick high, right? Obviously, I believe we didn't meet the inefficiency here, but we did meet the structural inefficiency here based on this is a previous low. And that pretty much dictates bearish order flow, bearish conversion, bearish structure, right? And as of now, right, we know that a very significant low has been broken in terms of our medium term in terms of our medium term perspective, right? Meaning this low. So because this low has been met, I know that we are technically bearish. So currently, right, when I'm looking at right inefficiency fill and invalidation, once again, I'm looking at the reaction here. So when I'm looking for a bias to essentially predict, or not predict, but essentially play off of, I'm looking at reactions. So the reaction here generates a new low. So because that new low is generated, right, I know now that this is bearish. So because we have a bullish break of structure here, you could look for a hedge, but that is technically counter trend. So I'm more so looking for the conversion internally, right? And currently, right, we see where price came back into, right, which generated bearish order flow here, right? So this now, right, although we are bullish coming into, sorry, until here, right, I know that if I'm going to take any risk, my invalidation is there. So with that being said, right, the fact that we are potentially looking at this here now, what time frame was that, 30? Yes, because we are looking at this now, I'm not gonna short here, right? It doesn't really make a lot of sense to me, just because, right, we did not create a substantial new low. We did not create a substantial new low, so although we are at inefficiency here, unless we get a clear conversion internally, then it doesn't really make sense for me to want to take risk to continue lower, right? Because for all we know, right, we're looking at this, right, on M15, but if we zoom out, right, this is a pretty overextended move, and I would more so like to see potentially price come back into a premium, right? I would like to see this break, because then this pretty much creates low, high, high, low, high, low, high, low, high, unwillingness, but we haven't solidified our range yet. So once we solidify the range, then I can start looking for conversions up here. Right, so with DXY, it's looking bearish for the medium term, just based on the information that we were provided with, which was the liquidity grab and the major structure break here, right? Because this low was what generated the move into the liquidity grab, excuse me. Right, so moving on to EU, right? Pretty much what we said with EU, right, is that we can anticipate our continuation into our liquidity point. Right, like we said, we don't know what will happen after liquidity is taken, and as you can see here, there is a very clear bullish liquidity grab, and that's pretty much the reversal of what DXY did. Right, so zooming out a bit, right, because we have the internal bullish liquidity grab. Let me actually highlight that there. Right, because this now led to the taking of the final leg that essentially brought us into that previous liquidity point. This is now a much bigger form of liquidity grab, meaning in the medium term, even if internally let me zoom out a bit. Even though internally, right, this could signify bearish movement just because of obviously break of structure, right, and inefficiency fill up here, short-term bearish order flow, right? Look at this reaction. It took way too long, right, to even meet here. So even if we take out previous liquidity, right, who's to say we don't have the exact same thing that happened here happen down here again? So I do want to essentially show in the medium term that I am bullish, right? And that reflects also on the confirmation of DXY potentially continuing higher, right? So with that being said, this could potentially continue lower short term, right? Especially when we dive deeper, right? Just looking at how this has reacted. Let me go to M3. Right, there is, right, potential unwillingness based on previous high to low, right? And so we pretty much take out a preliminary structure point here, right? Meaning, right, that we are now have an internal structural range there, right? But we also have a bullish liquidity grab up here. So what bias do we essentially play off of? Well, I'm always looking at the immediate range, right? And what I'm looking at, right, is where we should have mitigated from and essentially rocketed, but inevitably failed, right? Meaning this is now looking bearish to me, right? If we are to react here, I would need a bullish conversion in order to even want to risk, right? Just because, right, where order flow should have essentially rocketed is essentially where we have failed. So now I need a bullish conversion to think otherwise, based on the bearish narrative in play. Which, like I said, could be, you know, in the form of a potential future liquidity grab, right? But I'm always also referencing, right, our overall closures, right? And this is looking semi-bearish to me, right? Like I said, we don't know what happens after we meet a liquidity point, right? But until that happens, right, we can't make a decision. Looking at AU, right, this one was interesting. Why? Because I was still anticipating a potential sign of reversal. And looking at this internally, right, notice what happened when we talked about, I believe on Friday, or was this Tuesday, where we had essentially bearish order flow. I believe it was in play like around here, and we were seeing price potentially give AU lower movement based on the order flow present, and that's pretty much what happened here. And we met liquidity, right? So technically it's technically bearish, right, because of bearish order flow, right? So to invalidate that, we would need a type of liquidity grab to the upside, which is essentially what happened here, right? But it's not necessarily, I'm focusing on this, I'm more so referencing what this means. So we have a confirmed bearish reaction, right? A confirmed bullish pullback into bearish continuation, which met multiple targets here, right? But this inevitably failed and then took structure. So it is a form, right? You could call it reaccumulation, you could call it a type of even structural disruption. But what I'm acknowledging here is that this led into a bullish break, right? And remember, right, this is now seen as a confirmed reaction. A confirmed reaction, right before our POI, right? Meaning I would now need a bearish conversion in order to meet, or in order to even attempt to risk, right? So now let's say our POI was met, right? And we had an initial sign of bearishness, right? Meaning that the POI was valid, right? The POI was valid because we gave a confirmed reaction, which led into a continuation BOS. Right now I know in order to meet a pullback, I need to be bullish, right? Meaning low, high, low, high, low, high, low, high, low, right? But I'm looking for this POI. Where we are in price, right? An initial starting point is potential SC here. Oops. Right, so the only way I'm going to risk is if I have a type of confirmed reaction, right? And when I'm looking at this from M5, right, I see a very clear sign of reversal here because we took liquidity, right? There's no volume, that's Asia session, but this inevitably gave a pullback to the downside, right? But I like to see, right, liquidity be taken in order to give you a sign of bearishness. So the only way I'm going to risk, right, and keep in mind this is still very aggressive, is via M5 candle. That's the only way I'm going to risk, right? And if we dive in deeper, right, I like to see that we took out our liquidity and then broke out preliminary structure here, leading into a potential bearish liquidity grab, right? So the only way I'm going to risk is if we meet this POI, which is 2.5 pips. But as you can see, right, we had a confirmed reaction here. So once this is met, this is invalidated unless you see a bearish conversion. So because this now gave a bullish liquidity grab, right, and we're giving bullish order flow, right, I need a conversion in order to have this meet, right? And or meet criteria. So from our low into our high, into our low, into our high, into our low, confirm into our high, there is no bearish reaction. There is nothing giving me a sign of bearishness, right? And I would have needed that low to be taken out, right? So because that is the case, this POI inevitably fails. Does that mean the POI is invalid? No, it was valid because it gave a reaction, right? It's just the internal details did not match the criteria in order for me to risk, right? So looking at price now, right, because this failed, right, that is another form of disruption, a structural disruption, because we have a confirmed reaction, then opposite direction, right? Meaning now we are technically bullish, right? No matter which way you look at this is looking very bullish, especially I believe this got a structure point. Yep, it did up here. A confirmed structure point here, which was the overall POI. So this is now giving me very bullish signs, right? And just looking at where we are in price currently, right, I see a bearish break of structure, right, and into bearish mitigation, potentially 50%, and this leads to unwillingness, which gave a bullish push, meaning this is now a bullish liquidity grab in terms of the preliminary range here. So it's now a matter of whether we're going to react off of the POI that we are currently at right now, right? Or if this breaks, then if we come down here, then I do need that bullish conversion. I don't want to hear that, Nico, please. No, still looking bearish. You can buy, but you'll probably take a loss. Anyways, moving on. As you can see, high, low, high, low, high, low, still bearish. Let's see. GU. This one, right, is already now showing big signs of bullishness. Let me see. Big signs of bullishness, right? And this is the reason why I didn't want to trade this, you know, in terms of the continuation bias, because we had just taken a major point of liquidity out, right? Because that is the case, right? As you can see, we don't know what will happen after the liquidity point is taken out, right? And as you can see right here, is even if you would have focused on the continuation high low retracement, it would have failed because of liquidity, meaning this green line, I mean this green line now, but you see what I mean. So analyzing this internally, right, the POI that we gave, right, even the reaction gave a confirmed reaction, and it even took major points of structure here and even here, right? But as soon as, right, our previous lower high is taken out, then, you know, that pretty much changes the bias, right? And although this has been moving a bit weird, right, I'm pretty sure a couple of people entered based on there, but looking at, you know, essentially where realistically it would have made sense for me, right, you could say there's a POI with your invalidation up here, right? This is showing low momentum and then a spike in momentum, so that gives me the sign of a turbulence point being here, right? Meaning that's where we return to, right? And although we need to be bearish in order to come into the POI, low, I mean high, low, high, low, high, low, high, low, break, unwillingness, more break, and this is where realistically it makes sense, which is a London move. And the only reason why this makes sense is because we gave, right, the pullback, unwillingness, break of structure, which even took out preliminary structure, that then met inefficiency with your invalidation being here. And this is what is currently causing price to skyrocket. As for now, you see momentum slowing down once again. So it's now a matter of seeing whether we're going to continue right, or reverse, right? You currently see bearish order flow, right, giving you that pullback move, right? But who knows if we break here or not, right? Inefficiency and validation being down there. So, right, as of now, yeah, I would like to see this start pulling back just so I can get a discount, because I know that I'm now bullish. I know that I'm now bullish, at least, you know, in the long run, right? But yeah, I mean, even just looking at momentum, move up, move down. But yeah, is that POI valid? Is what POI valid? What POI? For one, I don't answer whether a POI is valid, but I don't see any valid POIs here. I don't know why you would look for a sell here. You can say that, right? But what happened here? But what happened here? You can say the same thing, right? But price is never, trading is never as linear as that. It's such a linear way of thinking. You have to understand internal reactions as well. So you can say this is bearish, right? But we just taken our preliminary structure, right, which solidifies the range, right? So now, right, you could say there's a POI here. You can say there's a POI there. You can even say there's a POI here, right? But it doesn't matter if I don't have a conversion. If I don't have a conversion, then I'm just picking a high. But I know that in the long run, I know I'm bullish. Like this took what? The whole pullback move has taken 236 days. That's about 7, almost 8 months. Whereas the push up only took about 5 months. Right, so where we are momentum wise is, you know, that we're technically in a discount, right, per se, right, not realistically in terms of our fib, right, but I'm only saying discount because of where price could eventually come back into. But yeah, do you guys have any questions? Any questions today? Wow, that lecture actually went on a little bit longer than I thought. Cool, no questions today? Yes. What's up? I saw some people selling yesterday GU. I don't recall. Let's see. Where could we have realistically sold? Looking at yesterday, today is the 15th, 14th. Okay. No, not there. Can you see where exactly? If you just give me where. I need to know where you mean. Let's see. in the group. Just at me on the message and I'll pull up anywhere. Okay, let's see. Well, what is this based on? What is this based on? Up here? Okay, let me zoom out a bit. But it's not necessarily wrong per se. Right? Because let's see. So realistically here, right, is quote unquote picking a high unless you catch a conversion, which means you would catch a pullback, right? Because of our POI confirm reaction and then that being taken out, meaning that's a type of structural disruption into the upside. So I know that if I'm trading here, right, it would only be based on liquidity and it would be a very short-term trade. So off the bat, I know directionally a short, right, is short-term. Right, so let me see where this is at 137.26. Yeah, it was pretty much here. So this, right, let's see. This is essentially where you took your trade. Didn't acknowledge liquidity there. So from a scalping perspective, this is perfect. Yeah, perfect. From a scalping perspective, if that's what you're looking for, this is perfect. Because, right, you wait, right, for a potential grab of liquidity, right? You then allow, right, bullish structure to come into play, right? This break solidifies the range. Let me take that out, right? So I know internally I am bullish, right, until that breaks. And then I know that there is a bearish conversion here, right? So this taking out liquidity, then taking out structure, solidifies this move here, right? So realistically, this entry and this entry are excellent entries from an entry perspective, from a scalping perspective. Makes a lot of sense. But directionally, that's where it's, I don't want to say it's incorrect because it really just depends on what you're looking for. But directionally from a medium to long term is incorrect because you're technically picking a high. That's basically that. So if you're essentially wanting to catch the pullback, right, then I know, right, here's obviously the break, high, high, low, high, low, high, low, high, low, high, low, high, low, right? Now into where this is taken out, that solidifies the range, right? And if you note, the range is now, let me take that out. The range is solidified here, meaning this is now solidified low, and this solidified low based on even this solidified low, right? That's unwillingness. So from a scalping perspective, that's cool. That's fine. That's actually a great trade because from an order flow perspective, that is correct. But from a directional perspective, incorrect. Right? So if I see, for example, if I'm in that situation and I see the solidified low leading into unwillingness, right, then I'm either going to hedge or just close out the position. There's nothing wrong with that. Looking at this, you're looking at maybe a 2 to 3 pip stop, right? Because this was like up here, I believe, right? And that, let me actually get that correct, 20. Yeah, it's right around 20. Yeah, right around here. So that's already 30 pips, right? It's already at least a 1 to 10. Right? So you didn't understand it because directionally you're looking at a medium to long-term trade, right? Whereas the trader here is more so looking for a short-term trade, unless, you know, they just weren't looking at direction period and they're just looking to scalp. Then that's, you know, it just depends on the perspective that you're looking for. Right? Does that make sense, Nico? So just recap. Yeah, you see, it makes sense. Like, for example, this, right, inefficiency invalidation, that's a perfect buy scenario because of the solidified low after the preliminary structure break. You see, but that's actually a good scalp because that's what, 30 pips in what, less than a day. Yeah. So it just varies because, for example, your entry criteria will not necessarily need to match your directional criteria unless you're looking for a medium to long-term trade. But if your entry criteria does not meet your medium to long-term bias, then that's, you know, that's technically a scalp or minor intraday trade. So it just depends on what you're looking for. All right, does that make sense? Cool, cool. All right, cool. Does anybody have any more questions? Right, so there's, just recap, there is entry criteria and there is bias criteria and then there's management criteria. Right, entry, check. Bias, it just depends. Check for scalp, X for medium to long term, and management criteria, that would have been done here. Whether you want to hedge or you want to close, up to you. All right, just make it make sense. If it doesn't make sense, you can't justify it. Cool. Does anybody have any more questions? Cool. So can we end it off here then? All right, guys. Thank you guys for hopping on. I'll see you guys on Tuesday. All right, everybody have a great weekend.